A Singapore investment firm, Temasek Holdings, has reported a record net portfolio value for a third straight year. CNA's Cheryl Lin with this report.
That portfolio value of $313 billion makes it the third year in a row that they've broken a record for this. Now, last year's figure was $308 billion. They said this growth was boosted by strong performance in investments in tech, life science, as well as the consumer sector. But we need to note as well that the one-year total shareholder return fell sharply to 1.5%, down from the 12.2% that we saw last year. And they said this was because of poorer performance by investments in Asian markets. Now, it's important to note that 66% of their investments are in Asia. Well, not only that, but there's also macroeconomic headwinds to blame. Now, last year, Temasek had already cautioned that they were slowing their investment pace amid increasing downside risk. And it seems that these risks have materialized. Take, for example, the trade conflict between the US and China, as well as slowing global growth. Now, all this is weighing and may continue to weigh on their results.
Overall, global growth has weakened since the middle of 2018. We expect this to continue. Trade and technology tensions are already disrupting supply chains. Business confidence is being tested. Capital investments have slowed. If growth remains weak, the low interest rate environment is likely to persist. This could lower returns expectations into the foreseeable future.
Well, some things to note about the strategy as well is that they've increased their exposure for North American and European markets. They now make up a quarter of their entire investment portfolio, just behind China and Singapore with 26% each. Now, on whether the US and China trade war would impact these investments, they noted that it's less likely because they are domestic investments and are therefore more relatively insulated from that. Now, financial services remain the biggest portion of their portfolio, but they said that future investments will continue to be guided by structural trends. Now, some of these structural trends we see include longer lifespans, and because of that, they've invested in companies like cell therapy companies, as well as also an interest in sustainable living, which explains their forays into eco-fashion, as well as sharing economies and smarter systems, as well as a more connected world. We're now looking ahead. Temasek says that they're remaining cautious but open to good investment opportunities, with an added focus on private equities, because they say that focusing on these unlisted assets will provide better returns than focusing on listed assets.